afternoon, traders. This is Tony D from the easyMarkets dealing room in Sydney. We have a special for you today. We're going to be talking a little bit about how to trade day trading at night and how to look at for entries and exits in a fast-moving market. In a market where there's something happening, you want to get involved in either buying or selling. How do we know when the right time to get in? And that's a big question, right? And it's solved by many different styles of trading. But if you're a day trader, generally you want to be trading in and out within a couple of hours. And that sort of environment does require that you go looking for things that are moving. And a lot of the times when you go looking for things that are moving, generally the market's already done a big move one way or another. And so you have two options: to hop in at pretty bad levels in the same direction as the market's heading, or to wait for the market to overextend and then fade the trade and then look to make a few pips that way, because inevitably there will be a lot of fading. Well, when you're looking at charts, you always see them having a little bit of a roller coaster, and the point is to sell on the highs and buy in the lows. Alright, so if you get something which is moving, firstly, that's where you might be able to get a signal here to trade, and you just have to wait for the exact signal. So let's have a little look at the Euro USD last night. The Euro USD last night had a big sell-off and then a sharp reversal. And the point is, how, if I was trading last night, would I have been able to buy into the euro at the right levels? What sort of signal would give that? Well, you would have to use a lower time frame. So 4 hours doesn't really help you, and you'd have to be watching at the start of the session when the market was moving. And lucky for us, we get the opportunity to trade the London session where there's always a lot of movement. Okay, and first things first, if you want to look at the charts, you probably want to make them bigger. So we're on the main platform here, and if you click on the expand button, it is going to pop out, and it's going to pop out and make a bigger chart that you can sort of do better analysis on. I mean, you can still trade off the if you've got two screens, it's a lot easier. But if you can just Alt Tab, and you'll be able to see your Alt Tab back there quite quickly to do a trade once you have your entry. But if you're looking at if you're doing some analysis, you do want to have as a better view as possible. Alright, so what I like to do is when you first open it up, it's going to look something like this. I like to push the third little hourglass along, view all, and then for my trading style, I like to add a very simple indicator with some modifications. And so what I like to add in is the relative strength index. And when you first add the relative strength index, it is going to look not like this. Okay, it's going to look a little bit different, and I've made some modifications to it to make it look like this, and those modifications are very simple. Okay, if you've never done before, I'll run you through how to do that right now. Let's open up the Euro USD chart from fresh, and we'll make it look exactly like the chart there. Alright, so it's a 15-minute, and we've added an RSI. Okay, so that RSI is a little hard to read, and it's on the wrong settings. The default settings for RSI is it uses 14 periods. What it's doing is just telling you if it's overbought or oversold. And so by decreasing the amount of settings that it's using, it will give you a quicker overbought and a quicker oversold reading, which for this sort of trading of the 15-minute chart, you do want to get access to oversold and overbought levels more quickly. So by the time it's rallied up here, it's already overbought. By the time it's rallied, fallen down here, it's already oversold. But that's not the key thing. The key thing is to be able to interpret not just when it's oversold, but it's running out of momentum. Okay, that's the key to trading, to buying the dip and selling the rally, is when is it running out of momentum, when is it likely to roll over. And if you're looking at the charts generally, selling is usually done in two waves. So you have the first wave, which is the biggest, and that gets you into oversold territory. And then you have a second wave, which is not as aggressive. Alright, now to make this chart look a little bit nicer, we're going to change a couple more settings here. So I've only changed the period so far, but I'm also going to change the style. So it starts off, everyone on default view is histogram. You want to change it to area. You don't really need the moving average for this one. And You don't really need the equilibrium, and just make it solid, the overbought and oversold lines. Okay, so only time that we'll be looking on this chart, only time we'll be looking to be buying is when it's oversold. Only time we'll be looking to sell is when it's overbought. So immediately that means that the only time you're even looking at a trade is when it's below the red line for the buy side, and for the sell side just when it's above the green line here. Now it's not enough that the market is below though. What is the key here, and what we're looking for is the second wave of the sell-off, and what this does create is generally something called an RSI divergence. It doesn't happen every time in the market, but what I'm going to do is explain what it is. It's when the market makes a new lower low. So this is the low of the day. This is the low of this period. Let me zoom in just a second. Okay, so this is the low of this period. This is the low of the RSI. And then a few periods later, exactly at the 18 GMT. So for us, that's 4 p.m. yesterday. The market made a new lower low. Okay, but the RSI made a higher low, and this is the divergence. This is what we're talking about. This is what we're looking for. This is the money maker. If you see the market make a new low, but the RSI tick higher, that means it's losing momentum, and the chances of it reversing are much higher now. So you've been very patient, waiting, selling, and then all of a sudden it's got oversold, and the condition of a new low, but the RSI not making a new low, has been met. So at the end of this candle, at the close of this candle, we would have bought. And this particular entry worked out extremely well. And this particular method, because it is a counter trend method, you don't want to be sticking around for too long. And if you stuck around for a while, you would have made a lot of money here. But the broad rule is maximum of 5 periods. But most of the time, you'll be looking to stay in this trade just to make a predefined amount of money. So if you got in at 117.25, you might be looking for 15 pips. So on a standard trade, about $200, and you would have got it in the first 15-minute period afterwards. But if by the end of the 5 periods, the market had stopped moving higher or done nothing at all, then the time is to close, because the signal is only valid really for 5 periods. If you are in profit and you want to let it run, there's nothing wrong with that. You can do that. A lot of the times it is the bottom, and it can end up rallying 50, 100 pips. But it is most accurate when you're talking about the first 5 periods afterwards that you can get in. But sometimes if you were to open 2 trades, you can take your 15 pips or 10 pips, whatever you get in the reversal, and let the other trade run for as long as possible. So that's another method you could do, depending on your risk profile and how aggressive you are. The good thing about this whole trading setup is that you just put your stop below the new low. Okay, that's it. So in this particular case, your stop is going to be just 10 pips away. You get in at 25 and your stop is at 15. Okay, so you're risking 10 to make 15 or 20 pips, and potentially more if the market's fast moving. But in general, you don't put your stop too much further than the previous low. If it makes a new low, then it's negated the whole signal. You don't want to be in that trade anyway. All right, if you're looking for these opportunities, they don't come all the time, but you should get them at least once or twice a day. And if you're looking for the sell side, you got to make sure that the new peak in the so here when you're looking at the sell signals, if you're looking at here and saying, well, look, this is a lower high on the RSI, is this good enough? No, well, the market didn't make a new high. Okay, if the market didn't make a new high, then it's not a clear signal. And if we're looking for to do it properly, you want to wait for the exact situation where the market makes a new low or the market makes a new high, and you get divergence on the RSI. So here's an example where the market makes a low, it's oversold, and then you get a little, the next low in the RSI is higher than the previous low, but the market doesn't make a new low either, so it's not an entry. If you're looking at and furthermore, you don't really like the market to go back above the red line in any of this behavior. You want it to stay below. This is good, this is good. This is too big a dip. Okay, this is too big a move. This is borderline. Okay, this one doesn't make a new low, so it's not a signal to enter. So it's not. That's not perfect. Let's look at, if you want to get sell signals, you look at a market which is rallying quite sharply, you're going to get a lot more sell signals. So let's look at, say, something like the dollar CAD last week was providing on Friday. It had the Canadian CPI numbers, came in weak, and so you saw a huge rally, and you got extremely overbought very quickly, and so you're looking for the chance to sell. Okay, so straight away you're looking for the market to make a new high, yeah, and for the RSI to be lower. Alright, this one here is fairly clean example of that, but it's a little bit murky as to when the high was made, the next candle or this candle. And so in this particular case, if I was sitting here looking at it, then I wouldn't take here because it's not made a new high. On the next candle, it does make a new high, and the market remains above the overbought, so that's the sell signal there. Yeah, it's not as clean as looking as the first example, but it's definitely an example here of an entry into this market. Okay, on the sell side. So it's this candle here that provided it. In terms of whether it worked out, yeah, well, if you sold at the close of this candle, you put your stop above the high, then you'd still be in the trade and get that pullback in the 5 period that happened on the 3rd period after, and end up closing up around here, which is another 20 pips. If you're looking for setups though, you know, since that happened, there hasn't been another one on the Canadian dollar. This one didn't make a new low. Okay, and so you cycle through the different pairs, looking for opportunities. Dollar yen's been in a strong uptrend. Okay, so there could have been an opportunity to sell in the uptrend if the right situation happened. Okay, so in this particular candle, the market has made a fresh high. Yeah, the RSI is overbought, and it's diverged here. And you'll be selling at the top there. I mean, you have to put your stop loss by default a minimum of 10 pips anyway away. So you'd put your minimum stop loss of 10 pips with the guaranteed stop with easyMarkets, 8 pips on MT4, 10 pips on the web. And so in this particular case, you'd still be selling with a stop loss at 1150. You wouldn't have got stopped out on that little 3 pip move higher there. And you would have got out after 5 periods, which is 1, 2, 3, 4, 5. This one makes just a few pips. Okay, ended up being the high in the whole sequence, but that is not what we're here for. We're just trying to make that reversal. That's the trading pattern that you're looking for. Didn't make a new higher low, higher high, so we just avoid that one. This one here is a sell. See, the market's overbought, and this particular candle is the highest of that peak. So you'd be selling at the close, which is up here. 1, 2, 3, 4, 5. Getting out there or any earlier if you've hit your profit target. This one, again, only a few pips. But still, we're looking at accuracy rating that is very, very high so far. We haven't had a negated one yet. There will be negations, of course. But so far, the ones we've been looking at in the last 4 days, these charts are showing the last 4 days. We haven't seen one yet. Let's see on gold. We're trading off the 15-minute chart. On the 5-minute chart, it's just as valid. And on the hour and the 4-hour, you can use it on anything. It's best on the 15 or the 5-minute though. Ooh, gold's been a little choppy, hasn't really given clean levels. This one's not a new high. You cycle through your majors looking for this particular setup. You will find it brewing, especially if the market's been moving. But you're looking for these not to be going downwards, but to going upwards. And these could be going downwards on the top side. So nothing on dollar Swiss. Let's have a look at some of the crosses there. Perhaps we can find it a little cleaner on a cross. We'll look on the Euro Yen. This one's borderline in terms of, is this RSI higher than this one? I mean, to my view, it's very borderline. Okay, it would be the sort of signal though that I might take if I'm looking for trades. It is lower than the previous. The market is lower. It's borderline whether this is basically about the same. So it's not clean, but it's the same sort of setup as well. Looking for the second wave. There's a lot of this second wave selling, second wave buying. Don't really get anything clean there. Perhaps the Aussie dollar will be kinder to us. Quite choppy here in terms of... Okay, this could be an example of one which negates itself fairly quickly. This was a relentless rally in the Aussie yesterday, so that would be the sort of environment where where there is not a third, not a second wave, but there's like wave after wave after wave. So this one here, you would enter on the sell here, 1, 2, 3. You probably got stopped out on the about 10 minutes in. You did get into profit a little bit in the meantime, but you would have got stopped out on the 3rd minute in. Okay, so this one here is the Kiwi on the rally yesterday. You saw the divergence. The market made a new higher high on the market, and then the RSI is lower than the previous, and then you're in for 5. So you'll be opening the trade at the end of this candle. 1, 2, 3, 4, 5. Be getting out down here. So that's another signal that worked out well. So we're looking at about 4 out of 5 so far. So this is a setup that can provide you with lots of opportunities. You should be able to get one each day if you're looking at enough pairs. We've only looked at the majors here, and you've seen 4 in the last 2 days. So you can definitely get if the market's moving, but you're looking at a fast-moving market, and if it's selling off, then you'll be looking for it to exhaust itself. This is going to give you that buy signal. And if you're in a fast-moving rally, you're looking to sell, and you should be able to get that signal as well once it's exhausted itself. If you have any questions, please come through and have a chat with us. You'll be able to access this a little bit closer inside the market traders group. If you're using MT4, the setup looks like this. The RSI is very similar, so I'm looking at that same trade yesterday on the Euro. You can see that it's a little less clear on MT4's default RSI indicator, but if you're looking at the best charts, which we do have inside our market traders group there, which is a little chat site you can hang out with other traders and dealers here. You'll see that it does look a bit nicer on the trading view charts there. You can see it a bit more clearer. New lower low, new higher. Okay, so if you need help making these charts and have any questions about this method, don't hesitate to call us on the numbers below. If you're not a member of easyMarkets and you do want to have a little further discussion, you can have a chat with me by opening up an account, and I'll be able to get in contact with you from that point. Thanks a lot, guys.